It's the end of the week and it's time to see what's been happening with the weekly wrap-up. Joining me from London today is Craig Erlam from OANDA. Craig, US retail sales came out this week better than the forecast but lower than the previous reading. Why is this?
When it comes to the US retail sales data, I think there's a couple of things that we have to consider. The first is that this is a monthly figure, so any numbers that we see are always in comparison to the month previous. This takes us to the second point. The month previous was unusually strong because of the impacts of the hurricanes, people having to go out and buy replacement items such as cars, also repairing their houses. Of course, they spend money as well. So this actually bumped up the figure in the previous month quite dramatically, which means on a comparison basis, it meant that this month was always going to be a little weaker. So the fact that we actually saw the number beat expectations, albeit with a very low increase, ultimately is a positive number for the US, and I think that's the most important thing that we have to take away from this. We could have easily seen a negative figure here as a result of the comparison, but in reality we saw another strong number, and I think this is going to help the trend because the first half of the year with regards to consumer spending was particularly weak, so the fact that we have seen a little bit of a bounce back now is ultimately a positive.
Central bankers were a part of a panel this week discussing central banker communication. What was the most important information for the investors to take away from this?
To be honest, I think the central bank event this week was something of a disappointment. We had the heads of arguably the four largest central banks in the world, the Federal Reserve, the European Central Bank, the Bank of England and the Bank of Japan, all talking on the same panel. So there was the possibility that we were going to see some quite dramatic market-moving comments from the policymakers, but it seems that they are all learning lessons from the past and they know how sensitive markets are to these. So they really did act with a lot of caution. It seemed that the event itself was more of a reflection of past monetary policy moves. Unconventional policy measures such as quantitative easing and forward guidance was a particular focus. So while we did learn a lot in terms of the type of measures which we can expect them to take in the future, there wasn't anything market moving at this point because there wasn't discussions, for example, with Mario Draghi suggesting what the next step in tapering could be, or with Mark Carney in terms of how many more rate hikes we can get and whether they're being optimistic or pessimistic. So while it was an interesting event and we've probably learned a lot about the responses in the future, I don't think there was anything that investors can take away in the near term.
We also had the US core CPI data out this week. What should investors take away from it?
I don't think there's too much we can take away from the US inflation data this week. I think it's important that we are seeing a change in the trend because the first half of the year was very concerning. We did see inflation start to fall off a little bit and people were starting to question whether this was a natural move that we were going to see a bounce back from, or whether this was being driven by tighter monetary policy actually weighing on the inflation outlook. But we have seen a rebound since the middle of the year, which is positive, and this really just continued that rebound. As I say, I don't think we learned too much from it. It would have been worrying if we saw another dip, but we didn't. And ultimately, we have to remember that while the CPI data is watched closely because of the timing of the release, the Fed's preferred measure of inflation is the core personal consumption expenditure price index, and this is released in a couple of weeks' time. Typically, the readings are lower than the CPI data as well, and I think this is going to be the biggest driver as far as markets are concerned. But if this CPI data is anything to go by, then it's going to suggest that we're going to continue with this subdued inflation, and the Fed is going to continue to have some difficult decisions on its hands because inflation continues to trend below target, even while they are continuing to raise interest rates.
Well, that was Craig Erlam from OANDA. Thank you for watching and enjoy the weekend.